On August 12th, 2025, small cap companies watched the live AGORACOM real world asset tokenization showcase. This was the response.
I truly believe this is going to be the most important financial shift in the history of small cap.
We're projected to do $3.3 billion in private issuances, as well as $2.7 billion in equity management throughout the next year.
We may be looking at a future where if you're not tokenized, you're invisible to the next generation of investors.
The Zebu token has done over $9 billion in transactions between telecom companies.
Today, there are over 300 million active crypto wallets around the world.
Sit back, relax, and get ready to watch.
Hello, everyone. I'm George Cholis, founder of AGORACOM, and I'd like to welcome everyone from both the North American small cap industry as well as the Web3 industry from around the world, including the UAE, Europe, and even Asia, for attending this incredible event. I've had the privilege of leading almost every new tech initiative for small cap markets over the past 27 years, but I can unequivocally say this is the biggest, most important, and most exciting paradigm shift I've ever seen. To put it in perspective, we all know about Elon Musk's drive to get us all to Mars and beyond. And I feel like this is the moment in which all of us in small cap are going global to where we've always dreamed and belonged, but just couldn't get to. We couldn't because we simply didn't have the right tools or the right partners. Today, that all changes. It's not that our current partner hasn't served us well and won't continue to serve us, but it was clear to me when I first went to Dubai in search of alternatives 2.5 years ago that we needed to tap into this new market to help us fix what we all know has been broken for far too long. And I don't have to convince any of you of what that broken system looks like. We've all watched Terry Lynch and his team at Save Canadian Mining fight ferociously on our behalf against naked short selling. My friend Zishan Saeed and his team at Quantum Biopharma have launched a $700 million lawsuit against two major Canadian banks for alleged spoofing and stock manipulation. I'm proud to be fighting beside both of them, and I believe they're going to prevail. But fighting the problem isn't enough for many of us who might run out of time. We have to build the solution. And to be clear, not just to address this problem, but also to adapt in order to reach the biggest market in the world between centralized exchanges like Coinbase and Binance, brokerage firms like Robinhood, decentralized exchanges like Uniswap, and blockchains like Solana. There are literally hundreds of millions of token buyers around the world who are buying and selling 24/7, 365 right now. We want to be a part of that, and we have to be a part of that if we want to grow to our potential and thrive. But don't just take my word for it. Let's look at what the CEO of the biggest asset manager in the world with over $11 trillion of assets under management has to say. When the largest asset manager in the world is telling us this, we listen and we act and we do it fast. AGORACOM is acting, and everything changes today because we finally have the vehicle, tokenization, and the global partnerships to make it all happen. BlockRidge is the world's first comprehensive RWA ecosystem, providing compliant and scalable tokenization services that provide access to financing for asset owners while also allowing a broad spectrum of users to invest on a fully compliant basis. You'll be hearing from them today and also learning about their ecosystem, but suffice to say, I've partnered with them for a good reason. The Dubai Blockchain Center, inaugurated by Sheikh Mohammed bin Rashid Al Maktoum and led by Dr. Marwan Al Zarouni, the Dubai Blockchain Center is leading Dubai's vision to become a global leader in blockchain technology by collaborating and attracting businesses and talent from around the world. They took me in, gave me an opportunity, and believed in me with a partnership announced earlier this year. And together we're launching their first ever online real world asset conference later in 2025. The final piece is you. AGORACOM, with your full participation, is going to make sure small cap companies are not only not left behind, but we're going to make sure we lead. And this isn't just talk, this is real as it gets. And let me tell you exactly why. Small cap companies have real assets. We've got mines, projects, IP, contracts, equipment, and more that are all verified by feasibility studies, 43101s, audits, management teams, and securities filings that often have driven us crazy, but will now serve us incredibly well to differentiate us by verifying our assets at the highest levels in a world right now that's dominated by meme coins and unverified projects, but now yearning for real and verified growth assets. We have them. It's time we show them to the world, finance them, and grow them to their full potential on their own merit. And isn't that what we've always wanted? A system that combines compliant tokenized financing, new engagement, and a global trading exchange, all purpose built for companies like ours. It's happening, and by being here, you're already ahead of the curve. Get comfortable. Let's have some fun, and let's begin. Before we dive deeper into how this works, I want to take a moment to introduce the team that's helping us build it. Because if you're wondering, George, this all sounds great, but who's actually behind it? You're not wrong to ask. Let me introduce you to the BlockRidge team. We're joined by Raj Brahmbhatt, co-founder and CEO, alongside President and COO Kevin Cafeo, who are not only the most brilliant DeFi minds I know, but Canadians here will also be happy to know that Kevin is one hell of a hockey player out of Long Island.
Thank you for the introduction, George, and really, truly pleasure to be here. Also, big thanks to the team for putting this together today. I'm really excited to share not only what's happening, but really the beginning of something special with all of you. Because all of this is new to many of you, I'll cover first the broad strokes, how we got here, about us, as well as then we'll dive into the details and how we can move forward with a potential partnership. No doubt, I'm sure many of you will have a lot of questions. We'll be sure to answer those within the Q&A session later on. BlockRidge is building exactly what your industry needs: a fully integrated global tokenization ecosystem that combines the structure of capital markets with the speed and reach of blockchain. From my personal perspective, BlockRidge brings together veterans from traditional finance, compliance, but also new age thinkers who are innovating Web3 infrastructure. Our leadership team not only combines individuals from firms like JP Morgan, Merrill Lynch, and SoftBank, but also leading Web3 providers around the world. From a structure perspective, our ecosystem spans beyond just a tokenization platform to fund administration, DeFi protocols, as well as servicing top-tier asset managers. We spent the last 3 years designing a cross-border platform capable of handling tokenized securities, yield products, trading strategies both on-chain in regards to digital assets, but also off-chain, as well as private equity to create an all-in-one, regulated, and globally connected platform. Generally speaking, how we work is as follows. Partners feed assets into BlockRidge's tokenization engine. Capital is raised via a primary marketplace, both through us as well as our partners around the world. Both retail and institutional investors can access, trade these offerings in various jurisdictions, as well as connect with alternative products in the market. Our structure is built to support 1, compliant RWA token offerings, primary and secondary marketplaces, on-chain asset management, as well as interoperability with centralized and decentralized exchanges around the world. With respect to our reach, BlockRidge isn't operating in isolation. As we've built in the Web3 ecosystem, we all know and love the interoperability between large players around the world, and we've already secured many of these partnerships. Over 15 jurisdictional partnerships from the UK, Turkey, Canada, the US, and beyond to natively support both securities, financial services, but also Web3 services. We're projected to do 3.3 billion asset in private issuances, as well as 2.7 billion in equity management throughout the next year. In plain English, we are the infrastructure layer for every small cap company who needs to raise capital globally, stay compliant, as well as unlock 24/7 trading in years ahead. Combined with AGORACOM's track record of marketing expertise, AI agents that will communicate 24/7, 365, and potential opportunities for tokenized rewards, investor engagement, we truly think that we have a global super app for RWAs that will help transform what the financial ecosystem and capital markets look like moving forward.
Kevin, thanks for that, and especially make it relatable, because it's easy in this world to get really lost in new jargon that a lot of people aren't familiar with in this world. So you made it relatable, and hopefully your platform can also help out the Leafs to fix their problems at the end of the day, because that's how great your platform is. Now, as easy as Kevin and his team make it seem, finding the right partner for AGORACOM was very difficult. Given how young the industry is, there are many groups out there who have good individual parts, but not the whole package. And especially when it comes to compliance, there are a lot of people out there right now claiming they can tokenize, and I'm using the air quotes, but 98% of them would get us in trouble before we even started. BlockRidge understands how capital markets actually work, and now how the small cap market actually works thanks to AGORACOM, what small cap issuers actually need, what the investors actually need, and maybe most important, all that, what the regulators actually need. BlockRidge was the only team that checked every box, and that's why they're on this webcast with us together. The technology is real, the partners are in place, and we're building something that's designed to work and to scale. So let's talk a little bit about why tokenized financing is the future for small caps. Why this matters, why tokenized financing isn't just a trend, but the most important transformation of our capital markets in our lifetimes. We're here today because something has shifted, and this time, finally, it's in our favor. For the first time in decades, a better financial system is being built that finally gives small caps the global reach, investor access, and the deal structure we've always needed, we've always wanted, but never had. Traditional capital markets helped us build the small cap industry, and they'll continue to have a role to play. But despite their attempts, they weren't built for us and have not been able to deliver the 6 ingredients small caps need most right now. And that's true global access, real institutional appeal, and transparent ownership. And then we've also got granular engagement, 24/7, 365 liquidity, and better financing structures. Real world asset tokenized financing not only delivers all 6 guys, it delivers so much more, because there's so much going on in that world in terms of technology, and we're gonna talk about some of those that overwhelming you during this presentation. But tokenized financing finally gives the infrastructure we've never had before. So let's walk through this. At its core, it's simple. Tokenized financing means you can take your real world asset, your mine, your patent, your offtake contract, and convert all or part of it into a digital token that lists on the blockchain. That token represents ownership in the asset, part, some, all, transparent, traceable, and tradable, and it's governed by a smart contract that determines its unbreakable rules of engagement. For example, no shorting, no spoofing. And what's a smart contract? For those of you who are just getting to know this terminology, think of it as a digital agreement. It's embedded in the token that automatically enforces the rules, timelines, and protections digitally and automatically. And this is available to a global audience of investors 24/7, 365. Guys, this is the unlock we've never had and have always dreamed of. The ability to tell your story without borders, raise capital on your terms, and build an aligned shareholder base in the process. And with more on that, we're going to hand it off to Raj.
Yeah, absolutely. Thanks, George. So it's funny. The idea for BlockRidge got seeded back in 2020. And at that point in time, the assumption that capital markets would transition on chain was, it seemed that it was wishful thinking. But, fast forward to 2025 now, and it's already happening. And it's not just happening, it's happening at lightning speed. We announced this webcast in the week of July, thinking it was a good slow time of the year. And then on July 31st, the SEC launched Project Crypto, a formal US initiative to build a legal framework for token-based capital markets. And then just days ago, on August 7th, Singapore launched its national RWA platform, joining Dubai, Hong Kong, and the UK, all racing to become hubs for tokenized real-world assets. In my opinion, the term bull market has changed entirely, and the metric for bull markets will be, how much assets are being, how much in dollar value of assets are being managed on chain. Over time, I see that being the new equivalent of TVL or market cap. And, further moving on to the current events, at the end of 2024, the EU implemented its markets and crypto assets regulation, MiCA, a game changer, right? That crypto came in from the cold in Europe. Now you know why BlackRock CEO Larry Fink said the next generation for markets will be the tokenization of securities, right? When the largest asset manager in the world mentions tokenization, it shows where the capital markets are truly headed. And these are not crypto people. These are capital markets giants, and they're not wondering if this shift is coming. They're acting like it's already here.
All right.
So
thanks, Raj. What this means for small caps. Global reach. Why just raise from 5 Canadian brokers when you can also raise from hundreds of global institutions and hundreds of millions of global investors? Platforms like Coinbase, Binance, Robinhood, and decentralized exchanges already support hundreds of millions of tokenized trades per month. That massive audience is already there. They're growing, and they're looking for the kinds of growth assets our small cap industry has to offer. Let's talk about real institutional appeal. Small caps have always wanted institutional ownership, but that's largely been a pipe dream because most institutions either can't or won't buy equity in what they consider to be penny stocks. But they're more than happy to buy alternative assets. So, for example, there are approximately 8,000 single-family offices globally. They're managing over $3 trillion in assets. That number is expected to grow to over almost 11,000 by 2030, with assets under management to reach over 5.4 trillion. And that's according to Deloitte. What's an emerging allocation for family offices? Tokenized real assets. Family offices have shown interest in the concept as it blends familiar assets with blockchain efficiency. So it's a win-win for them. Let's talk about the fact that transparent wallet-based ownership is real shareholder intelligence. Today, you have no idea who most of your shareholders are. You don't know when or why they bought or sold. With tokenization, every holder has a wallet, and every wallet gives you real-time, traceable, verifiable insight. Not only do you know who your supporters are, you'll be able to engage, reward, and activate them in ways we've never seen before. That's because wallets are not just storage, they're a gateway to smarter investor relations, allowing you to interact with them, incentivize them, and even reward them for loyalty by granting more tokens for the longer they're holding. Then we've got 24/7 liquidity. I think that's an easy one that speaks for itself. Legacy exchanges close at 4 p.m. Blockchain-based markets never sleep. Guys, I watch my sons and their friends who are talking to each other about tokens on a Saturday afternoon or Friday night, and they're on their phones and they're buying them. Tokenized assets can be traded globally in real time around the clock, and liquidity means it's no longer an event. It becomes a feature of your token that gives your current investors another big reason to participate in your token. Better financing structures. Tokenized financing doesn't just replicate what we already do, it makes it smarter. Let's say you're raising $5 million. In our current markets, we already know your stock will most likely get shorted by groups who want a cheaper price and then use your private placement to cover the short. And those are your friends. Then you're also giving up a discount to market, a full warrant, a 4-month hold that everyone promises they won't sell. but they do so they can recover their investment and then hold on to your lotto warrant. And then you pray the damage to your market is limited 121 days from now. And that's the best case scenario. Many issuers can't even get this done due to the massive dilution on account of an artificially low but surely manipulated stock price. So they do nothing and hope for a miracle change in circumstances. I'm not saying real world asset tokenization is a miracle, but it is the new construct we've all been looking for. In a tokenized model, you issue a token backed by your flagship asset, you fund it, and then you can finally start to grow it. Vesting is built right into the smart contract. 4 months, 8 months, 12 months, you can stagger it out. For all those investors say, yeah, I believe in you, now they got to put their money where their mouth is. Rewards can be offered to token holders who actually hold the token, and there's no manipulation before or after the tokenization. It's the same raise on a totally different construct.
So why don't we focus on the global investor landscape and how tokenization and on-chain securities enable accessibility to global investors? So today there are over 300 million active crypto wallets around the world, with projections pushing to over 1 billion tokenized finance users by 2028. And these aren't necessarily speculative users. These are users that are already using platforms such as Coinbase, Robinhood, Binance, and Uniswap. And according to other surveys, over 60% of Gen Z and millennial investors say that they prefer tokenized securities over traditional stocks. Primarily because of the amount of utility they get on chain versus the current closed loop infrastructure that they are investing into securities and stocks from. And they want direct access, round the clock trading, and ability to engage with what they have. Instead of only being able to access it through a UI that is provided by a closed loop exchange provider. So we may be looking at a future where if you're not tokenized, you're invisible to the next generation of investors. But if you are, you become relevant, discoverable, tradable, and global. So here's where the opportunity really lies. Right now, the tokenization movement is almost entirely focused on mega assets, which is U.S. Treasuries, real estate portfolios, and stock in large cap publicly traded companies such as Apple or Tesla. These are great, but one thing we know about crypto investors is that they are largely looking for growth assets. They want them to be verified. They want to find them undervalued, which is very important to note because that is how they generate real alpha. And they are driven by real teams. That's really where the why lies, because the crypto world has gone through its .com phase and had its fill of meme coins, rug pulls, and vaporware. This is why the next wave is about real assets with real teams and doing real things. Canadian small cap assets are backed 43-101. Engineering reports, audits, intellectual property filings, securities filings, real management teams fighting every day to build something real. And this is our value proposition to the world, and this is how we win.
And a final thought on this section here before we go into how it works. Guys, this isn't just about disrupting traditional markets just for the sake of it. It's about finally building a system that works for us rather than trying to succeed inside of a one-size-fits-all model that hasn't worked for more than a decade now. And here's the real potential icing on the cake, because I talked about Terry Lynch and Quantum Biopharma at the beginning of all this. If we do this right, if we really do this all together, we can shatter the naked shorting cabal. And why? Once they realize we can finance our assets and properly grow them to either generate real income for shareholders or sell them at fair prices and then reward shareholders with distributions, they'll have no choice but to cover their shorts at some point and maybe even leave our industry entirely. And I think that's exactly what starts to happen within 18 months, and then we never look back. So let's talk about how this works, a journey from financing to trading. Okay, this is the fun part. I'm going to walk you through what this actually looks like for a company like yours, from capital raise to global trading. I'm going to cover the broad strokes and then hand it back off to Kevin for the deeper dive. You decide to raise capital, but instead of going through the same old grind, hoping for fair terms and praying your share price survives the process, we launched a tokenized financing round backed by your asset. And here's what happens. Step one, we structured the raise through AGORACOM's partnership with BlockRidge, a regulated tokenization platform built for real world assets. Step two, investors buy the token, it's fully compliant, asset backed, transparent, using their wallets instead of brokerage accounts. Step three, the token is listed on BlockRidge's global blockchain exchange, launching in 2025. By the way, we're only a couple months away, opening 24/7 global trading to retail and institutional investors. And then step four, you raise capital on better terms, you grow your audience, and you stay in control. That's the journey, broad strokes. Kevin's going to come in here and tell you exactly how the system makes this possible.
Appreciate that, George, for the high level context there. We've all really dreamed about raising capital from true believers in your projects without kind of some of the overhanging aspects of traditional financing, such as major dilution, and in many cases, terms that are determined by manipulation of the underlying traded securities. With BlockRidge, first and foremost, you have the ability to tokenize individual assets on your balance sheet and create financing instruments from those assets to really monetize what you already have existing within your company. Secondarily to that, you have the ability to design the terms of the smart contracts with different investment criterias, some of these being vesting terms, participation rights, and voting, as well as different reward models that we've come up with AGORACOM, not only for investor incentivization and collaboration and contributions, but also for long-term holdings of the tokens themselves. Lastly, you have the ability to offer tokens directly to your investor base, meet your investor base, without the need for intermediary custodial solutions, brokerages, or any other regulated financial institution that could potentially take a cut of that financial raise. And then we really go beyond what it looks like from just raising capital. Tokens aren't static. They're living financial instruments that have the ability to grow with you alongside your investors. The exchange really comes in when you have the ability to trade 24/7 with full transparency. This public digital ledger allows for both record keeping, but also the ability for data analysts and market makers that we've partnered with to analyze what's going on in the market and give you full transparency of what's happening with your tokens in secondary markets. It also gives you the ability to be discovered by global investor bases around the world with inclusion of alternative functionality such as staking. For all of you that don't know what staking is, it is allowing your investors to pledge their assets for a specific set period of time in return for rewards. It also allows for loyalty rewards distributions, governance mechanics, and the ability to engage token holders strategically with different incentive mechanisms. And lastly, but definitely most importantly, built-in reporting analytics for issuers like yourselves, when you ensure both compliance from a KYC AML perspective, but also reporting on secondary trading, as mentioned before. You're really not just giving out a security or financial instrument. You're building a financial ecosystem that can grow with companies like yourselves and not against you. And really, because of all of this running on blockchain, you can now dispose of the intermediaries that you've currently been working with, such as some of the larger financial institutions that take heavy cuts from both initial capital raise, but also secondary market facilities. We can now include and programmatically create a transparent and borderless ecosystem that enables you to deliver both liquidity as well as financial instruments to your investor bases. Moving on to compliance and really the ideology behind how we built the BlockRidge ecosystem. We built it for control and governance within a decentralized environment, but with centralized components that allow stakeholders like yourselves and ourselves to abide by the regulatory environments that we all know very well. A lot of CEOs come in with different questions, such as, is this legal? Is it compliant? Are we going to get burned in the next 2 to 3 years by doing this? Rest assured, the ecosystem has been developed over the past 3 years alongside regulators as well as different jurisdictions to ensure that this is a regulated infrastructure, as well as system that programmatically can change over time depending on where the regulatory environment might move in the future. First and foremost, we have KYC, AML that enables you to compliantly onboard individual and institutional investors, ensuring that tokens are not only purchased by either qualified investors or different investor requirements, such as accreditations for specific Reg D, Reg A, Reg S offerings, but it also ensures that your tokens don't land in the hands of individuals from sanctioned countries, etc. Next, we have jurisdictional rule enforcement, wherein within our smart contract controls themselves, you have the ability to enforce, but also programmatically embed different jurisdictional rules. This could be for a Canadian-based offering, wherein a specific subset of investors from certain nationalities are not allowed to hold the token and or invest in the offering directly. You will then be able to programmatically discard those investors and they will not be able to hold the tokens. The token will actually not be transferable to those investors by nature. Next, we have immutable ownership records. This really goes to the traceability as well as record keeping functions that we can now remove intermediary function or intermediary service providers from, wherein we can give you specific ownership records, snapshots of holdings, shareholdings, and make sure that this is traceable through secondary markets and new innovative DeFi applications. Lastly, we have built-in vesting in unlock periods. This would be specific to specific regulatory requirements such as Reg D, Reg A, Reg S, wherein you could have a 4-month hold or a 12-month hold, wherein the lockup for investors to be able to transfer those securities amongst that period of time needs to be enforced. We can do this through the token itself rather than the traditional route of a custodian or record keeper to do this function for you. This is embedded within the financial instrument. Moving on, for you as an issuer, what does this really mean for you? One, you know who holds your token at any given time. Two, you can enable new marketing functionalities such as airdrops, rewards, voting, incentives. Three, you can also track behavior to understand investor sentiment. Is there going to be sell-offs? Is there different trade activity that you could either engage for and proactively engage meaningfully within those investors? Or it could mean that you can stay compliant with regulators while getting the ability to access capital at a global scale. Really, in sum, this means a cleaner, more advanced, as well as more controllable version of the public finance that we all know and have been built upon today. And really, as a CEO, you're not giving up the power. You're actually getting it back to be able to control the instruments that you're issuing in the future. To really sum this up in a visual, we have a 5-stage process wherein first the company initiates a raise. They work with BlockRidge and AGORACOM to structure that raise into a specific financial product, whether that be an equity offering, whether it be a debt offering or facility, or potentially subcategories when it comes to bonds, etc. We then have investors that have the ability to purchase these tokens through those smart contract enabled wallets to enforce compliance. The token itself becoming tradable through both native but also partner secondary market environments. And lastly, you have the issuer who has the ability to both retain, engage, and reward their shareholder base for interacting with their project throughout the life cycle of the token.
Kevin, thanks for walking us through that. That was awesome. And again, guys, trust me when I tell you how complicated This industry really is the Web3 and these instruments and all these different things. And Kevin and Raj doing a great job of keeping it at a relatable level. But it's really, really even far more sophisticated and complicated than that. Let's walk through a bit of a case study here. So let's talk about George Gold. All right, a Canadian small cap gold explorer with a pre-production asset called the Parthenon property. The company is fully permitted, has near-term production potential, is backed by a resource estimate, and has massive district scale exploration upside. George Gold is looking to raise $10 million, but the company's market cap is only $30 million, despite the fact that the asset itself is worth $60 million. So instead, George Gold launches a tokenized offering. The token is backed by the tailing site and future cash flow from gold recovery. It includes vesting over 12 months that can be staggered. It includes bonus tokens that are issued to investors who hold for longer than 12 months. And smart contracts prevent shorting, spoofing, and dump cycles. And the company can airdrop updates and reward exploration milestones to holders. So now imagine the difference there for you. George Gold raises on better terms. They access a global investor base of people hungry for real growth assets. This is open to anybody around the world, subject to obviously what Kevin said earlier with compliance, making sure that it's only offered to people that are allowed it to be offered. But it is a global offering at the end of the day. Your existing shareholders are very motivated to participate in the token as well, for obvious reasons. The token starts trading on a global exchange, and then you've got discussion, engagement, and buzz that's centered around the asset now going global because you've got investors from all over the world. And then you then use that success to fund and grow the underlying hard rock mineralization over time. The asset is worth $60 million. The market said it's worth $20 million. Tokenization unlocks that delta and lets you grow from there. And that's not a workaround. That's a rebuild of the entire system. So now that you know and you've seen how it works, the question becomes, let's go a little deeper into BlockRidge, because I think this is where you really got it. You all need to do a deep dive here, because when you're talking about changing the structures of public markets, credibility matters. And the team, as you've already seen here behind BlockRidge, isn't just a tech startup. They're capital markets, legal, and blockchain veterans who have built an entire infrastructure to power the future of finance. And to take a closer look at the platform, the people, and the numbers behind it, I'm going to hand it off back to the guys, starting with Raj.
Yeah, absolutely. Before I tell you what we built, let me first tell you why we built it. We knew that tokenization would eventually transform capital markets, but we also knew that it couldn't and wouldn't scale until it was fully compliant, fully auditable, and built to meet the standards of the real world. We didn't want to build a trading toy. We wanted to build the infrastructure that companies like yours and regulators around the world could trust. So, a bit more about who we are. BlockRidge is a global RWA tokenization infrastructure provider residing in Dubai and New York, two of the most forward-thinking jurisdictions in the world for regulated digital assets. Our team brings experience from both sides of the financial divide, right? So from SoftBank, Merrill Lynch, and JP Morgan, where our executives manage multi-billion-dollar assets in TradFi, and also from Chainlink, Coinbase, and Gate, where our product and infrastructure leaders helped build foundational Web3 architecture. Our diversified experience within the team is what really helps us excel in being able to serve both sides of the spectrum and build a balanced product, being able to acquire investors and asset owners, both alike from both sides of the spectrum. And from the leading legal and compliance institutions, including firms like Storm Partners out of Switzerland, our Global Blockchain Council, and McDermott, Will, and Shuttle now, originally McDermott, Will, and Emery, our Global Regulatory Strategy Council, primarily focused on the US, and Kerry Olson, our Offshore Regulatory Strategy Council. What makes us different is that we built this company at the intersection of three worlds: traditional finance, Web3 infrastructure, and real world regulation. We're not trying to replace the system, we're trying to build the bridge to make it finally work for issuers, investors, and regulators at the same time. Moving it on to Kevin for what we've built.
Yeah, to dive a bit deeper into the BlockRidge stack as a whole, not only the technology, but also the compliance system that really powers the entire ecosystem alike. First and foremost, we have the tokenization engine. This allows for issuers like yourselves to tokenize either equity, asset rights, revenue streams, royalties, or other line items on your balance sheet with the ability for smart contracts to one, enforce investing, ownership limits, investor permissions, as well as the cross jurisdictional rule sets that I mentioned earlier. Next, you have the compliance infrastructure with a fully compliant system in the UAE, UK, Singapore, Canada, and the US for specific securities offerings in these various jurisdictions. Not only are we really just ticking boxes here, but we also have legal smart contracts that are actually programmatically and proactively enforcing these rule sets upon each of the offerings through on-chain KYC, AML monitoring, as well as wallet level permissioning and auto enforcement of the various securities rules so that not only you don't need to know all of the different regulation in a global environment, but we can enforce that programmatically. Finally, we've already handled all of this through our top tier legal firms, as Raj discussed. And that gives us the ability to generate and structure deals accordingly through both funds, but also SPVs, SPCs, and some of the other private market offerings that we typically would see within the traditional financing environment. This is all done through NAV calculated tokens, so the ability to update pricing via APIs. Not to get too technical, this is verified and regulated as fund admins are typically conducting this on your behalf. We can also provide compliant investor dashboards, automated distributions for any earnings that need to be attributed to token holders, as well as audit trails for all of the financial transactions that are happening within the ecosystem. What this ultimately does is gives you the structure as well as customizability to raise capital in a way that makes sense for you. Regulators are open and willing as long as we are abiding by the current rule sets to structure these alternative financial products that allow you to succeed as business owners and executives yourselves. Lastly, we have the exchange, wherein 24/7 trading as well as on chain price discovery can happen. This also gives you real time market surveillance and really the ability to interact and engage with shareholders, but also the ability to provide a trading facility that they can interact with and obtain liquidity through. Moving on to why this really matters, what I'm sure you're kind of all thinking about really sounds interesting. Is it right for me? Is it trusted? Is this alternative financing space something that I should really explore? Really, I'll answer this quite clearly. We're not built for crypto projects. We're built for credible growth stage companies and large enterprises that are looking for alternative financing solutions, either via funds, equity, or debt offerings. We are getting away from the traditional hype projects that are skirting regulations, going offshore, and all of the hard parts, wherein crypto projects are known for being scams, etc. We want to partner with people who have real assets, who have the ability to raise capital from sophisticated investors, as well as down the line to true believers in your project, in which you all have shareholders of your companies that both AGORACOM is helping you interact with, but also who you're engaging with on an everyday basis that has been really heavily discounted due to some of the macro environments that George mentioned earlier in the call with shorting, etc., within Canadian markets specifically. So that's really why AGORACOM partnered with us, right? We're giving you the ability to raise capital through a structured environment, distribute those tokens, as well as track and trace those tokens throughout the entire life cycle. I guess to sum things up here at the end, really, when you hear about tokenization, I don't necessarily want you to think crypto. I don't want you to think that we are just another crypto company that's looking to raise a bunch of capital and rug pull investor bases. This is a highly regulated environment. It's responsible, transparent, and at a global scale. BlockRidge is really proud to be partnering with AGORACOM. Couldn't give enough thanks to George and the amazing team that they have over there. We're excited to continue to work with visionary CEOs like George and all of yourselves to really reshape what financial markets are going to look like in the future. The time is now. We're seeing it all over the world. So without further ado, I'll hand it over to George for the closing here.
Kevin, Raj, that was fantastic. And the compliance part for me is unbelievable. And I think that's so important to everybody. And just the names you listed off there, your law firms, your global law firms, your US law firms, is going to give people great comfort. And that's what gave me great comfort during my due diligence process. For the before moving to into the Q&A, you're starting to think, in fact, I just got a great text. I won't name the person, who says, "Great Zoom, G, impressive platform. Like to see how we can execute now." I mean, that's already the messages I have coming in. And so let's talk a little bit about that. Now that you've seen what the structure actually looks like and the ecosystem looks like, and you've seen the power of what AGORACOM and BlockRidge are bringing, the next question is a simple one: how do I get my company involved? This isn't just a webcast, it's the launch of perhaps the biggest thing that has ever been launched in small cap. And we're truly inviting all of you to be a part of it. Fortune favors the bold. Within the next few days to a week, AGORACOM will be opening a submission process for companies that want to participate in this platform. And what we're looking for, just the very beginning, but we're going to be scaling this up, guys. But what we're looking for are 10 to 12 companies to start off. We're sector agnostic. What does matter is quality, strong assets, real teams, serious growth potential. Whether you're pre-revenue or cash flowing isn't crucial. What matters is that you're ready to take part in something transformative and help lead it. All right. So we'll be publishing a secure submission form with predetermined questions about your business, asset management team, goals, etc., and so on. The application can be reviewed by an AGORACOM-led advisory group made up of capital markets professionals, compliance experts, Web3 strategists. We're not just looking at who wants in, we're evaluating who's ready to lead. To be clear first, all inquiries and submissions, I got to make sure I mention this, have to come through AGORACOM because we're the tip of the spear. We're the first line of review. So don't go, contacting BlockRidge because it's just going to send you right back to us. We're quarterbacking the process because we understand small caps, obviously, and we're committed to making sure the right companies get the support that they need. But here's what's important, and I want to be clear about this. This initiative doesn't just work because of the technology alone. It works because of you and because of all of us. And what I mean by that is every company we onboard has a role to play. If you're selected to participate, this isn't going to be a set it and forget it exercise. You're going to be part of the first cohort of small cap companies that are tokenizing real assets that are listed for global engagement. And for the movement to succeed, we're going to need your story to be told, your leadership in explaining why this matters. That's going to be really important. Your voice in sharing the opportunity with investors, with stakeholders, and even with competitors, because we need to grow this ecosystem. Naturally, AGORACOM is going to play a major role assisting you with marketing, content, and engagement tools you've already seen. But let me tell you, you haven't seen anything yet. We're building AI agents right now that will not only engage on AGORACOM, but on social media channels around the clock and in different languages, because this truly is global. It's not 9 to 5, it's not Toronto. So we're going to need that. We're going to need that. But if you think that's crazy, I'm about to take you to the matrix, because we'll be launching AI agents that talk with armies of other AI agents And this is happening right now. There are AI agents out there that are acting as portfolio managers, investors, content creators, and even marketers themselves. So the more you embrace this, the more credibility the space gains, and the more momentum we build as an industry, as a small cap industry, so that we can go from 10, 12 to 50 to 100 to 200 tokenized companies out there. And then the faster the capital starts flowing, and then we've got an entire ecosystem in which we're all benefiting. Okay. This is the way we break through. This is the way we create a brand new asset class for the global audience of investors who are looking for real assets, growth assets, verified assets. And as I've said to many of you already, this isn't the George show. This is for all of us. It's for issuers, service providers, financiers, investors. We need healthy participation from stakeholders to succeed, and we're inviting you to help build it and pave the way for everyone to participate and win for literally the next couple of decades to come. I truly believe this is going to be the most important financial shift in the history of small cap. If we all do this right, we'll finally get the one thing we've all been asking for. Very simply, we all wanted a global marketplace to sink or swim solely on the merit of our companies and the efforts of our people. Without these black box algos and all the stock manipulation, we just want to sink or swim on our own merits. And we have something incredible to offer the world. Let's show them what we have. Let's invite them to join our journey so we can start building the next and biggest generation of small cap success stories, one token at a time. Let's go make history together. And with that, I thank you all for listening. And hopefully you've gotten great value out of this. We've got a Q&A now starting, and the last one that we did went about 45 minutes with the AGORACOM AI. So we're looking forward to this one. Let's start, guys. My team here, if you can give us the first couple of questions for us to look at. All right, so I'll read off the questions here. I'll start off, and then I'll hand them off to whoever needs to answer them. So, first one for our good friend Dan Kozel. Thanks, Dan. Young up and comer. Will these tokens be layer 1 or layers 2? Kevin, maybe you want to answer that.
Yes. So tokens can be issued across multiple permissionless chains, both layer 1 and layer 2. As of now, BlockRidge has compatibility with all of the large chains within the EVM ecosystem. If you're familiar, the likes of Ethereum, obviously as the layer 1, and then moving on to the layer 2s of Base, Inc., Arbitrum, etc., all built on top of the Ethereum stack. We also have are coming out with tokenization on Solana as a layer 1, and we have capability of doing private blockchains as well. If you're familiar with the infrastructure there, wherein they're not public blockchains, these would typically be relegated to enterprises and financial institutions that are looking to have private market securities rather than public. Hope
And
that
Kevin, I'm going to follow up on a question there for you from a practicality standpoint of view for an issuer. What does it mean to have to either be built to either build on a layer 1 or a layer 2 blockchain?
Without getting into kind of the really big details, I mean, from a practicality from issuance perspective, you're really looking at your investor environments. Layer 2s, obviously optimized for speed and cost at a secondary level when it comes to transactions. With foregoing some of the layer 1 security practices that they're built on top of. This is typically done through rollups, ZKs, etc. Depending on how much of a deep dive you want to get into the space. Layer 1s are typically slower, more expensive by nature. They offer enhanced security and more decentralization. Secondarily, layer 2s are typically done through a centralized sequencer that really optimizes for efficiency rather than decentralization. In regard to token issuance, we've seen the majority of issuances done on Ethereum, and then interoperable with all of the L2s. Likewise, with our tokens, you have the ability to transfer them amongst chains, so there is interoperability between your layer one and layer twos within the EVM ecosystem, and coming here hopefully in the near future between alternative layer one solutions.
And bottom line, that means a lot of cross pollination, right, Kevin? That where
Yeah.
you start doesn't necessarily mean where you end, and you can reach different investors that are on different systems. I'm going to say systems and blockchains. That
Yep.
enables the globalization, right?
Yep.
Next question is from Anonymous. What security commission monitors the tokens? As I presume that they are a security, obviously, yeah. But what security commission monitors, Kevin? I know what the answer is, but obviously we want to give everyone the right answer to that.
Yeah. So in regards to the specific security commission, it really depends on the issuance jurisdiction. Typically, we would have uh, this conducted through our structuring process with our team. We can work through both onshore and offshore facilities, set up an SPV for the financing event, and or do direct financing. However, most of the clients would typically want to go with a segregated structure, either an SPV or a fund setup that we're looking at financing. And then whatever jurisdiction that's in, whether it's offshore in a jurisdiction such as Cayman, that's typically used for international financing, or onshore, either in the US or UK, UAE, etc., that you would ultimately be obliging by those that security commission and the rule set and regulator within that jurisdiction. Secondarily, it really depends on where the investors are sitting in the primary market sales. We obviously our partners can help with structuring all of this for you alongside our team to make sure that you are fully compliant in terms of the investors you're onboarding. There are specific securities laws for distribution to each of those various jurisdictions, and obviously that pertains to the qualification of investor. As I mentioned during the presentation, you have everything from accredited investors through qualified investors, qualified purchasers. These have a variety of different requirements depending on if you're in the US or outside. And it's really composable to the structure that we come up with. It differentiates by project. At the end of the day, we're a infrastructure to this entire ecosystem and can enable that either natively or through our partner networks.
Next question comes from Alan, who asks, who are the principals of BlockRidge? So obviously, Kevin, we know about you and Raj right here, and you guys have been talking about BlockRidge stuff. Tell us a little bit about you guys. It's a couple of principles and your back, the kind of things you guys have done to get here. Because obviously, you didn't just start this last year and picked it up as a hobby. You guys have an unbelievable regulatory and technical uh, uh, knowledge. And I think people would probably want to know just a little bit more about you and Raj, and maybe Aren or something like that as part of the team.
Yeah. I'll give a quick intro on my side, then I'll hand it over to Raj, because he can talk about some of our financing and backers as well in terms of the principles and how the project got started. I started off my career in banking infrastructure, selling across US and Latam. Then moved into more of the investment banking side, where I was helping facilitate and underwriting the factoring of large telecom facilities for both infrastructure and voice, SMS, and data termination at a global scale. We were utilizing credit lines to facilitate those debt vehicles and invoice financing opportunities. Later on, got the digital asset itch, as many other people did within our industry. Raj and I and Aren, our third co-founder, really came up with this idea that this is where the market was moving. Decided to dive deep, use both our experience, but also a wealth of experience from advisors, family, and close contributors within our individual networks to really expand that out and ideate. Raj, I'll hand it over to you for some of the backing stuff, but that's me.
Yeah, absolutely. So a bit about myself. I'm the co-founder and CEO of BlockRidge, co-founder, co-CEO of Cebu. Originally got into Web3 out of coming out of TradFi, wherein I was managing my family office, investing in private equity, venture capital, and maintaining a liquid portfolio of securities. Um, in the process of trading in public markets, I came across Bitcoin, Ethereum, XRP, etc., the mainstream traded assets back in 2019. And I'm a fundamentally driven person. So before I started acquiring those assets, I had to understand what blockchain technology was actually useful for. So in the process, got an understanding that blockchain technology's primary, back then at least, use cases were store of value and value transfer. So, at that point in time, identified a specific problem set within the telecom industry, built out Zebu to solve that problem set. What Zebu has been doing for the past 5 or so years is building, scaling, and distributing payment solutions for telecom companies. We have processed over $9 billion in transactions. During that process, myself, Kevin, and Aren were looking at the more integrated solutions that could be built out with blockchain technology. And the key aspect of that was hard coding compliance and infrastructure to make securities and commodities cross-border tradable and make compliance automated end to end. So that's really how BlockRidge was born, with the purpose of providing accessibility to both asset owners and investors alike. And yeah, and that's the investors that we have on board and the ones that we're speaking to fully believe in our ethos, our mission, and our vision.
I like the way, Raj, you just kind of skimmed over the fact that your token that you guys launched, the Zebu token, has done over $9 billion in transactions between telecom companies. And you guys are all, more than half the age of most of us that are on this call right now. So it's incredibly impressive. And if I had something that done $9 billion transaction, I'd be wearing hoodies all day long. That would be saying that. So, kudos to you guys. It's unbelievable the success you've already had with your own token. You guys launched your own token that had real world application, and it's been hugely successful. I can't wait till you guys cross the 10 billion mark, because I'm assuming that's going to be a really big special day for you guys. A couple of other questions here. I like this smart question. Guys, how about private companies with large assets?
Yes, so private companies are the main focus here, alongside public companies. I would say that we typically work with both, either public companies looking for alternative financing solutions outside of their existing equity stack and shareholders, so without issuing new equity or diluting themselves. And then on the public side, we do work with a lot of or private companies to enable both equity financing, but also credit or debt-based financing, all structured through tokenized investments. Typically, within the private companies, we would request audits, etc., to be uploaded throughout the system, and then those delivered. There's a due diligence process that you have to go through, both with our partner entities as well as with ourselves and legal counsel, etc., to be able to enable this. We are relatively customizable in terms of the backend infra. We also work with funds. So outside of just your private or public company sets, we work with tokenizing different funds opportunities, both liquid funds as well as closed and open-ended funds in the credit space and private equity space. Happy to share over more details about all of those different structures, but private companies with large assets is definitely a big portion of our pipes.
Alan asks, how will you go about attracting investors to BlockRidge to trade? And then how easy is the platform to use for investors? So let's talk about maybe that one first, the latter question. How easy is the platform to use for investors?
Incredibly easy. I would say that we ultimately have abstracted users away from blockchain. Natively, you can get smart accounts within our system. For those of you that don't know what smart accounts are and what that means, effectively, we're giving you a wallet that is controlled by you, custodied by you. It's a non-custodial solution wherein you have control of your assets. However, you can interact with that wallet through either 2FA and or multi-signature principles. that allow you to create different governance functions. So with all of that being said, your typical governance processes for either bank account management or your Web 2 based brokerage firms would be applicable to us. And obviously, as we continue this out, George, I think it might be of the essence to do another webcast with a bit of a
Oh
product
yeah.
demo. So we can obviously showcase the platform itself. It's easier than you would expect to use from an investment and from an issuer perspective. So.
Yeah, definitely. I think what we're accomplishing here is big, broad strokes, getting people to understand the structure, the advantages, the benefits, the compliance, all those things, because this is essentially creating new markets at the end of the day, and you can't cover it all off at once. So absolutely, that's going to be a great one to do in September when everyone's back. Nathan Hansen, our good friend Nathan, always a great supporter. Thank you. Are Canadian regulators aware of BlockRidge and this impressive presentation? Those are his words.
Yes, aware. We actually, prior to the partnership with AGORACOM, have not done much in Canada specifically. However, obviously built systematically for Canadian regulation as one of those key components. In regards to the actual distributing of the financing products, typically we would work in other structures outside. At least that's what we've done in the past. However, we have the partnerships in place to raise financing from Canada specifically, as well as the legal applications in place. So I hope that kind of answers it. Like I mentioned during the
Yep.
earlier compliance question, uh, it is very jurisdictional dependent. Wherever you want to raise financing from, we can apply either via our partnerships or our native regulatory environments, and we can help you out there.
And by the way, I'm going to go back one step because Alan had a two-part question. We answered how easy it is to use the platform. The first one was, how will you go about attracting investors to BlockRidge to trade? Let's do that in two parts. Kevin, why don't you do the part about bigger partners, family offices, that kind, and then I'll go into more of the multi-layered, a little bit of the multi-layered liquidity strategy that people are going to be a little more aware of.
Yep, within the broker dealer network that we've been able to set up, we have the ability to attract family offices, RIAs, so financial advisors, wealth managers around the world. They can directly invest in these assets. These are typically done through our coverage team and expansively through the broker dealers that we've partnered with and have. So I think that really when it comes to ultimately attracting investment, we see anchor investors being these large participants within the offerings who understand the risk associated with both private and alternative asset investments by nature. And then it really becomes distribution down the line through brokerages and financial advisors who have the ability to understand and then portray those investment opportunities to their end clients. Obviously, no investment has no risk. There's risk associated with every financial instrument that's created either on chain or off chain. So really honing in on what the market segment is for each specific offering, and then helping mitigate those risks through some of the technology components that we're able to provide. George, I know you have
And
some
if it was
important stuff, so.
and if it was just that, nothing else, that would be fantastic on its own. But we're also developed what we like to call a multi-layer liquidity strategy. So, and some of these you're going to be all more familiar with. But first one, and I'll just touch on all of them with a little bit of description. The first one is activating your current shareholder base. So most small caps already have a loyal and we think very underutilized investor community. So we're gonna turn them into an early liquidity engine, and we think they're from some of the feedback we're getting and the behind the scenes work we're doing, we find that there's going to be a lot of excitement around this because shareholders are kind of suffering from equity exhaustion and with fighting black boxes, 359.59 down ticks for half a penny and a penny at the last possible second by black boxes, and the regulators tell you they don't know what it is. So we think activating the shareholder base is low-hanging fruit. Market makers in every token, so every token launched will be supported by professional market makers. And amazingly, it's not just the market makers you think, but there are these automated market makers, and we're not going to we won't go down that rabbit hole, but it's pretty unbelievable. Institutional liquidity support. So Kevin kind of touched on that: wealth managers, family offices, and so on. Automated 24/7 liquidity pools. So we won't get too technical, but we're integrating I'm going to say this: compliant automated market making mechanics. So think smart contract based liquidity that runs around the clock, that ensures there's always a buyer or seller available, even during off market hours or low volume days. Token specific marketing programs. So just like we do in the small cap world, each token but is mandatory, is going to have its own marketing program, like a traditional IR program, in which each token will have its own ongoing marketing, investor awareness. Token holders will have their own forums and all that kind of engagement. AI driven liquidity. There are these tools, and I'm almost remiss to say them, but I'll say them, called virtuals and Cato Yaps. These are AI powered systems that monitor liquidity in real time. They adjust market dynamics automatically. They do all sorts of things. I mean, that's just a different rabbit hole. That's unbelievable that this all happens automatically. That's why we talked about earlier when I said AGORACOM will be launching AI agents who will be talking to other AI agents. So that's a little bit around the liquidity question. And obviously, we're going to do deeper dives into all of this, but that should give everyone a really good idea there. Let me go on to Fouad here. Fouad Kameladine asks, what are the costs involved in tokenizing an asset? And I know that's a bit of a moving target because there are different assets, different sizes, different jurisdictions. But one thing I've always liked about the multiple conversations we've already had with some companies is how reasonable it is. Maybe give us a big picture kind of assessment.
Yeah, before I do so, I do know Raj has to jump here. So Raj, I'll give it to you for a quick thanks, as he has another thing to attend to, and then I'll go forth
Thank
with
you,
it.
Raj.
Yeah, absolutely. Well, thanks for having me on, George. And of course, thanks to all of the listeners for joining in. It's always good to see people be excited about tokenization and the transition of the capital markets on chain. So thanks, everyone. And thanks for listening to me. Bye.
Yeah, we'll see you soon, Raj.
Perfect. So, in regard to the costs, really involved with each transaction, obviously, as you mentioned, George, they are differentiating by nature, depending on the nature of the instrument, the location of that facility, as well as the different service providers involved, whether it comes to fund admin and or the potential uh, investors that we're onboarding and how many jurisdictions they're coming from. I mean, typically we would see on the low end anything from 10,000 to 100,000 as being kind of your starting point for fixed costs associated with financing. What we typically would do as an ecosystem, though, is that we relegate those costs into the actual fees associated with the financing itself, and coinciding either with our partners or us. So no fixed cost is due upfront to you, wherein we would cover some of that cost
Excellent.
on our side depending on the sizing of the transaction. Obviously, it has to make sense, and we have to have the investors on board that are interested. I know that's not as specific as maybe everyone would want, but as we get deeper into the requirements, happy to share over granular pricing sheets, etc. It really depends on the asset.
Well, and that was one big reason why I ended up partnering with you guys, because there are a lot of guys out there who are pretending to tokenize. They're just trying to take advantage. They really can't do it. And they want these large upfront fees. I said, that's not going to work for the small cap world. You can't just take a large upfront fee and hope that something happens. So guys, the reason why BlockRidge didn't make that happen is that's why we've got this process of really applications, getting your information in so that BlockRidge can assess, how viable an opportunity is and bringing real deals to the table. So when they do put in their time and effort, they understand there's going to be a high degree of success. And then, like we said, a lot of these fees will come out at the end based on success and so on and so forth. So, but specific expenses depend on size and jurisdictions, but it's all really reasonable. And Fouad actually had a follow-up question to that, which is, Kevin, what's the typical timeline for tokenizing an asset? And again, that depends on the size, but for a typical deal, an average size deal, it's not a monster, it's not a tiny one. How long does something like this take? If today someone submits an application, tomorrow you look at it, you like it, and you say, okay, let's go down this road. Ballpark, what do you think everyone's looking at?
Yeah, obviously not all projects fit into one basket here, and I think everyone can understand that. Typically, we would look at around a 3 to 6 month process in regards to structuring out the token issuance itself, all the way through initial anchor capital allocations into that through the primary marketplace. So, really, that's the major timeline. Obviously, depending on the sizing, etc. Things can be extended or shortened, depending on what the requirements are and how quality the asset is. If it's something that there is a lot of obviously interest for, things typically move a bit quicker. But the structuring itself depends on the complexity of the instrument, what asset is looking to be tokenized, if it's an equity vehicle, if it's a credit vehicle, and the potential regulatory filings that are associated with that. If it's an exempt offering, obviously, once you get down the road to potentially offering to retail, things become a bit more sophisticated in terms of the legal requirements and filings, as well as the audit process that we would have to go through together. So that really depends on the asset, but I hope that kind of answers the question for you.
How follow up to that from me, which is how I touched on this during the presentation, which is how valuable is it that these companies already have filings done for all these assets? They've got annual audited statements, they've got press releases, they've got securities filings. In the case of mining companies, they've got resource estimates, or they've got 43101s when they're talking about, they've got 1 million ounces, or how important is that versus the traditional real world assets that are great, but they're very hard to verify?
Yeah, I mean, it's incredibly valuable. Obviously, it's a time saver from both sides. When we talk about one of the downsides to private company financing, from one of the questions earlier, obviously, you don't have many private companies do have audited uh, financials, audited kind of assets, depending on what they're looking to tokenize. But it becomes a whole lot easier once you have a full paper trail and auditability of the company as well as the assets themselves. Obviously, that just takes out part of the load in terms of just structuring the product. But it also takes out a lot of the load in terms of what we would request to be uploaded to the platform and all of the different requirements there that really all of the documentation and data that just needs to be available.
Yeah, we've already gone this through a couple of times. Your team just went into the CDR filings, a couple of these companies, and pulled out the necessary documentation, and we're able to verify just from that alone, which is incredible. It's a huge advantage. I have a couple of people. There's Dom on their new laptop. That's funny. See, Dom new laptop. Anonymous. A couple of other people who are asking a very relevant question, which is, what's a deal flow size, Kevin? What's a minimum? What's a maximum? And I know when it comes to minimums, there's two ways. If it's pure investment bank, like right now today, where the exchange isn't fully flowing, it's a much higher number. But once the exchange is launched and fully flowing, it'll be a lower number. So can you give us an idea of ranges for everybody to understand at home?
Yeah, typically, at least within our existing operations, we're not really looking at tokenizing anything under the $10 million mark. However, that is really just due to investor appetite and ability to allocate substantial capital into these different products. Obviously, they want to be able to gain exposure if they're going to go through the due diligence, and it only makes sense throughout the entire financing process. When we look at obviously smaller investment opportunities, they are not necessarily something that we won't take on or look at moving forward. It is something that we definitely have high hopes for when we talk about the future offerings that BlockRidge has in association with both AGORACOM but other partners in terms of both kind of crowdfunding based initiatives when retail is supporting with that anchor investment for financing rounds through trade facilities, but also some of the smaller high net worth individuals who are looking for smaller allocations into these products through financial advisors, through wealth managers, and in the variety of different network participants who are commonly distributing these products amongst their own client base. That's where we would see the ability to expand that out. We do have a platform that's coming hopefully live here by the end of the year as well that will help facilitate a lot of that. But it's in the inner workings. We'll have to save that for another day in terms of the announcement.
Yeah, and that's a nice little tidbit there for people to look out for, which will be really special, which will be really, really special. Our friends at New Age Metals are asking, can we tokenize a project instead of the whole company? Now, that question came in at 412, which is before the presentation started, I think. So now, guys, you at New Age Metals, thanks for the question. You probably have that answer, which is yeah, you probably want to tokenize that we want you what we want you to tokenize is your project, your flagship projects, as opposed to the whole company in terms of the stock. We don't want to tokenize security, the stocks right now. We want to tokenize the assets. And at New Age Metals, you guys have a couple of fantastic assets. So that's going to be great. Alain Lambert, our great friend from Arizona. How do you compare to StreamX? Kevin, are you familiar with StreamX? And do you have any views on how this compares to StreamX?
I am familiar with StreamX. I actually know Henry, their CEO, and one of their founders.
Oh, and explain to people what StreamX is. Sorry to interrupt you, but so that's not just a two-way conversation. Alan, maybe 10 seconds or on what StreamX is and then how you compare.
Yeah, so StreamX is a effectively another tokenization platform when they are specifically focused on commodity markets and bringing them on chain, both for issuance as well as decentralized exchange infrastructure. Right now, they are focused primarily within Canada. However, they recently also gained some exposure into the US through one of their financing events. Uh, they, I guess, are somewhat similar to us in terms of the technology and infrastructure. However, differentiating business processes in terms of allocations into different products. And we ultimately just have a different construct as a business in terms of the regulatory environments as well as the global nature that we're working within. I guess for both StreamX and some of the other traditional service providers in the tokenization space, the likes of Securitize, Republic, you have Ondo Finance, you have Chintai. All of these names, feel free, look up. These are all people within the space. We ultimately see a blue ocean opportunity here. We're specifically focused and catered to the needs of you guys, obviously in partnership with Agoracom, understanding the small cap needs specifically. But there are other companies focused on mega assets, as we mentioned during the presentation, such as tokenized treasuries. Definitely lots of movement within the space. Everyone has uh, consolidated infrastructure, which is a good thing for interoperability. So we are looking at shared deal flow, shared tokenized instruments. within some of the facilities that I mentioned, listing our tokens as well as listing their tokens within each other's platforms, right? At the end of the day, Web3 was born natively into a collaborative state. We don't believe that it's one winner will come out of this. Just like
So yeah.
financial markets with banks, there are multiple service providers that all work together. The great thing about blockchain and all of our infrastructure is that we have the ability to interoperate at a product level and automate a lot of those workflows. So things become easy for you guys as both issuers and potential investors. They become easy for you to interact with multiple platforms all through the same back end system.
And that's all done automatically. So going back to your bank analogy, there are different banks. Some are specialized in loans, some specialize in startups. And if they don't have a fit, if George goes to one and they say, well, you're not a good fit here, but let's call Kevin, it's done at the person level. When you said before it's done at the product level, it literally means you have machines talking to each other and interoperating together, which is super powerful, which is why I'm so excited for all of us and what the future of this means of tokenization, because that's what's going to happen. And Kevin said that on a maybe 10 times today. Interoperability, the ability at the product level, at the computer level, the machine level, whatever you want to think, even at the AI agent level, to have this collaboration going back and forth and making connections that just isn't possible in the real world today. And that's how technology moves. When e-commerce first came out, people were saying, I'm never going to shop for shoes online. That's stupid. I'm just going to go to the mall and buy my shoes and everything else. And now look what's happening, right? So that's where tokenization is going. Great question from our good friend Alan Barry Laboucan. George, you mentioned that service providers and promotion will be part of the system. How does my Rocks and Stocks news get involved as a content creator? Okay, so first of all, a nice little product pitch by you, Alan. Great move there. A great question. I'll answer that. That's why I said this isn't just a George show. We're going to need all service providers and all vendors to be to do what they do best, to all do what they do best. And in our current construct, a lot of us want to do what we do best, but we can't because we're so distracted by this broken market structure and algos and all this. We don't have to go over that again, that we're not able to focus. So Alan, for guys like you and other guys that I've spoken to about this already, you're going to have a chance to go to your companies, and if they're tokenizing, and you're going to be able to go to them and say, look, you're on Rocks and Stocks right now, and I'm talking about your stock and your company, the traditional side into the world. Now I want to talk about your token and your asset to the world. So it's not going to be just the AGORACOM show. It's not going to be just the George show. It's going to be for all of us to participate. And that's also for financing people who are on this. We don't want financing people to think we're trying to do away with them. We're not. It's like, hey, bring in your financing people, but let's just give them a different vehicle, a smarter vehicle for everybody, for them, so they don't get crushed, for the companies, so they don't get crushed. So this is for everybody, and it's not the George show. And Alan, thanks for bringing that up. Mo, who gave us a great comment earlier, will this need to be approved by Canadian stock regulators?
I mean, so I guess there's two answers to this. Partially, yes, depending on if you want to issue the financial instrument in Canada. Also, the ultimate kind of connection with your publicly available stock, if it is equity or consistent with equity financing, then yes, it would need to be. But ultimately, it really just depends on the structure of the vehicle that you're creating. So, would love to look at obviously the opportunity and dive into it deeper, but hard for me to answer off the top without having further details.
And I will say, Mo, we'll talk about that. Obviously, I'm traveling. Not a lot of people know this, but I'm traveling. I'm in Greece right now. I'm traveling tomorrow. So give me the week. But we've already considered that there are structures, and we can talk about that. And we'll talk about that more next week, and then maybe we'll put out in our follow-up email. We'll maybe include that as well, because that's a bit of a difficult question here. Anonymous asking, will U.S. public companies have to file a prospectus to clear the tokenized securities? But that's for token. That sounds like it's for the actual tokenizing their stock, kind of like what's happened with Tesla and Nvidia right now, on Robinhood and Securitize. But you want to
So,
take a stab at that, Kevin?
yep. Legal requirements are obviously depending on the security itself. I know this has been a repeating kind of answer, so apologies for that. U.S. public companies, in regards to tokenizing their publicly available securities, it depends on two fundamental architectures. If you are natively issuing a digital asset security in the form of a token, you would need to file that as a public company, depending on the exchange that it is being listed on. If you are just tokenizing your public market securities, so let's take NVIDIA, for example, and let's take the architecture of one of our other uh, kind of peers in backed finance, that's BACKED finance, in their platform with X stocks, that you would not have to file a prospectus with the US. It's really an attestation. Under the laws of MiCA, it's what is called a asset referenced token. And obviously, I'm not a lawyer, so don't take my advice for everything. We have legal counsel for this for a reason. But it's what's called an asset reference token, in which uh, you are issuing off of the back of an already existing security. That allows you to create a tokenized security that does not need a prospectus. So you would have to file a prospectus within the EU, whatever jurisdiction you're issuing the token from, but you wouldn't have to file an additional securities prospectus, if that makes sense. And
Yep.
then secondarily to that, for private market and private companies, when you're looking at potential financing events, it really depends on the investor base that you're seeking investments from. If you're going through like a Reg D or Reg S structure, requirements become relatively smaller and it becomes more of a reporting requirement. Once you start to get into retail, as well as non-sophisticated investors participating in the round, you then have obviously more regulatory requirements associated with that offering.
And guys, even though it's hard for Kevin to be specific and Raj earlier, because general questions need specific sometimes. Hopefully what you're really getting out of this is, man, these guys know their stuff. Just the fact that they understand all the different factors that may play, and that's what makes me really happy about all this. That they really know, that they really understand their stuff. Um, how well capitalized is by the way, guys, thanks for all the questions entered. There are a lot of duplicates, so I'm kind of passing over the duplicates for obvious reasons. This is a great question, and you may not be able to be specific, but you may be able to give a good idea here. How well capitalized is BlockRidge itself to build out the platform and keep all this going?
Yep. So we've been very fortunate to have early backers throughout the entire process, extending financing through us. That is, in regards to the past 3 years of development, few $1 million have gone into that. We also have a current financing round that's not public yet. So those investors are coming on board, and that's closing, but no public announcements have been made. But rest assured, we have a substantial runway to continue this moving forward throughout the next few years. However, I'll save be in tune for an announcement within the next like month and a half or so of our latest financing round.
Suffice to say, you guys have some great people around you, period, who believe in the
Yep.
future of this. And I'm privy to some of that, not all of it, but I'm very comfortable with BlockRidge's ability to be funded and to carry out everything it needs to do. It's got very serious people behind it who want to see this grow into something very serious in the next, because this is where the world is going. So the race is on, and so I'm very comfortable with that. Question here. Please make sure we all get an invite to the follow-up webcast. Absolutely. I love hearing that. I love hearing that people are already asking for that. That's great. Because we are, if I had to think, Kevin, we'd probably have to do, one of these every 5 to 6 weeks as new things develop and that we can unveil and show people. So that's great. And absolutely, that's going to happen. Anonymous asks, how does the concept of AI bots talking to AI bots to market these issuers align with the straight markets business model you're building here? I'm not sure align with the straight markets business model you're building here. So I'm not sure what that means. Kevin, does that make better sense to you? Because one thing I can say is AI bots talking to other AI bots is something that you have to incorporate. It's very real. Obviously, just like in the real world, there can be nefarious AI bots. So the AI bots that we are building will be aware of that and making sure they're not, in cahoots with the bad AI bots. But when we say AI bots, I want to be clear about something. A lot of people think bots, which is some bot that posts on Twitter, better known as X, but I want to say Twitter for all the old-fashioned guys. And these bots are posting spam and nonsense and trolling and things like that. That's not what we're talking about when we're talking about AI bots. We're talking about and Kevin, maybe you can give a couple examples, but there are many AI agents out there right now that are serious financial instruments that are backed by venture capitalists whose job is real-time analyzing of markets, specific markets, because markets can be anything, specific verticals, taking action, communicating with the world, and that's only going to get, and Kevin, correct me if I'm wrong, but that's going to scale by multiple levels in the coming 12 months, 24 and 36 months. I think it's just going to be, I think with 36 months, most serious traders and investors will have their own AI agents working for them full time. But go ahead and maybe shed a little light on your end there, Kevin, on what you think of that.
Yeah, hopefully I'm taking the question kind of in context here. Obviously, I'm always happy to talk about AI and the applications of it. In terms of wealth management, obviously this is the next construct of robo advisory that we're seeing hitting the market, wherein you have specific investment appetite and or risk criterias. Also, you have the ability to embed quantitative strategies as well as underlying analytical programs and signals into trading bots to deploy capital effectively, pull out, create hedged strategies. A lot of these things are strategies that we are also looking to tokenize. So outside of the realm, we have like hedge funds as partners who are looking to enable investors into their ecosystem, etc. Enable quantitative strategies and some of this agentic deployment in trading to be attributed at scale through different fund products that are coming out, both in tokenized form, but also ETF form. In regard to the straight market kind of business model here, at least fundamentally, I hope for the sake of society that we don't see a large movement of wealth management bots or agents start to move and align with bad actors. I think it is inevitable by nature that you will have bad actors utilizing these to squeeze out value. However, when we talk about straight markets, what we're really talking about is transparency and the ability to trace market orders as well as transferability of the assets themselves across various wallets as well as ecosystems. So when we talk about that, we have really the ability to analyze who is trading, where they're trading, and what kind of capital movement, whether that is a bot and or a person, when we talk about agentics making decisions, obviously they're not people. They don't have the ability to KYC, KYB themselves. There's an underlying person that has controlling interest, whether they're giving discretionary or non-discretionary responsibility to the bot. That bot is making a decision on their behalf, and they're overall responsible for that decision. So it really becomes a traceability mechanism, and that's the straight market potential, whether it's a bot or a person. We're seeing more bots though, so it's pretty cool stuff.
So, Kevin, when I said at the beginning, the analogy I used with Elon Musk want to take us interplanetary to Mars, and how we want to take small caps into Web3, it's not that big. It's not that big of a variance at the end of the day, right? I mean, I know Mars is Mars, but we're is it oversimplifying it to say we're going to help small cap companies go into the matrix because that's where they need to be, but it truly is a matrix. It's not it's not their grandfather's market. It's not their dad's market.
I mean, I definitely agree that it's a new market, right? It's new market infrastructure. It continually will be, but at the end of the day, like where BlockRidge started as a company was really getting grassroots to fundamental principles and how do we rebuild financial architecture. Ultimately, when the current traditional market infrastructure was built, obviously there was not technology available, both AI, blockchain, and future technologies that we're currently unaware of weren't accessible to different creators of these large institutions that have now controlled these environments for a long period of time. When you decompose the financial principles of what a exchange should look like and what a capital markets kind of marketplace and infrastructure should be, there really is no need for the amount of complexity to still achieve the regulatory environments that we have today. So when I say complexity, this means multiple financial service providers doing multiple and various actions, all taking small cuts of the bits and pieces. When we talk about custodians, when we talk about clearinghouses, when we talk about record keepers, when we talk about wealth managers and financial advisors, and all of these different counterparties, both at
Transfer agents.
yeah, both at an infrastructure level, but also at a service provider level. When you use blockchain, right, the main value proposition here is that record keeping is automated. Custody can be remitted back to the individual rather than an institution. There's optionality if you want security with an institution. Transfer agents can be automated through different compliance rule books and functionalities. Market making can be automated in terms of capital deployment and liquidity optimization across multiple trading venues and multiple exchanges, more importantly. So you're not looking at one exchange infrastructure, you're looking at many, many collaborating together to create a unified liquidity ledger. So, I mean, I know that was a bit of a rant, but overall, I think just to put that together, um, we're not recreating anything that isn't based off the same principles that markets have always been created off of.
Yeah, and that wasn't a rant. I think that was awesome how you went through that, and I liked how you ended that. It's same market principles, but done way better, way faster, globally, rather than us being locked into jurisdiction, whether you're trading in Canada or in Germany or in Australia. You know, it's this is you ended off really well there. Great question here. And by the way, guys, we're into our last few minutes. I'm going to go through a couple of questions, but I really like this question a lot. If you're not looking to list companies, but only their assets, how the tokens relate to their corresponding stock. Monetizing an asset on your platform will affect the stock negatively. No, I'll take a stab at that, which is the following. Right now, we have so many great small cap companies. I'll use the resource companies as examples, but there are tech companies as well with fantastic IP. But you know, the resource companies are easy. They've got assets that are worth a whole lot more just on quantifiable models that we could use. Like gold companies are valued at $50 to $100 per ounce in the ground. You know, so if I've got 1 million ounces at George Gold, I should be worth that asset's worth between 50 and $100 million. We all agree on that, depending on variables. So let's call it 75 million. But George Gold has got a market cap of $12 million because my stock has been crushed. So now I can't fund the company because if I want to raise $6 million to fund the asset to finish it off, I got to dilute the stock 50%. So the answer to that question is we think it's going to be the opposite because now George Gold can fund can fund the asset, can tokenize the asset, and just like any private placement, let's say it was a private placement, there would be dilution on the stock. Yes, here there is some dilution on the asset, but it's not the crazy dilution that we're seeing with the stock. It's a very fair dilution that everybody's happy with on the asset. Now, George Gold gets that money, he takes that $6 million, and he knows that he's got more resource in the ground, starts drilling, and as Alan says, you know, the drill tells the truth. I forget the term you use, Alan, exactly, but the point is now I've grown the asset from 1 million ounces to 1.6 million ounces, and the company's that more valuable for everybody. So what'll end up happening is the shareholders, if the mechanics go right, the shareholders say, "Holy moly, George Gold now has reasonable money to grow the asset, and that asset's going to sell now for $150 million, and we're all going to get, you know, $1.50 because there's 100 million shares outstanding. We're all going to get $1.50 minus whatever the token holders got. We're all going to get $1.20, whereas before the stock's trading at 25 cents and going nowhere. So we think, guys, that's going to be the exact opposite. That's what I think, anyways. Kevin, any quick contribution from you on that?
I will relinquish my answer. I don't necessarily want to give advice on the subject matter itself. Obviously, I can't say it will or will not impact the stock price. So I won't do so at the urge of probably my legal counsel who's watching right now.
Yeah, and by the way, I'm obviously not giving financial advice because George Gold isn't a real company. That's why I use George Gold, guys. Everyone watching, that's why I use George Gold with the Parthenon property because it's not real. But that's theoretically what I think is going to happen. And by the way, a lot of CEOs that we're speaking to believe the same thing. At the very least, they're going to get the fair shot. Another quick question here. You're going to love this. Raj, your top 3 crypto projects that you like and we should look into right now. Or Kevin, since Raj had to leave. I know you can't answer
Oh,
that, you know, because for obvious reasons, but tongue in cheek, you know, are you liking the long-term fundamentals of the crypto markets between, let's talk the big companies without being the big coins without being specific. Bitcoin, ETH, Solana, XRP, and so on and so forth. Overall, do you like the direction fundamentally, not the pricing, but how, you know, how these are going to be utilized, have real value and grow for next 5, 10, 15 years? What do you see long run?
long term, I mean, there's bullish sentiment for sure. I think from a digital asset landscape, there are a couple moving factors. We hit on some during the presentation. Consistent news coming out of the administration here in the U.S. Regarding the ability to integrate digital assets into your 401ks, 403bs, and different IRA products in regards to workplace investing. Obviously, all of these things contribute highly to just creation of demand. Now, whether that is indicative of a potential bull run, I'm not one to say. I do see long-term value in obviously the asset class as a whole. I think that's an understatement. But in terms of intermediary and short term, I think we are in a heavily volatile kind of marketplace right now. There's obviously risks associated with each of the individual assets specifically, but there's also a lot of major things in regards to what's happening to the underlying infrastructure. More projects are building on your layer ones and ultimately layer twos. We've seen a lot of great news come out with Base app launching here shortly. Integrated social networking.
Coinbase, for
Um,
people who don't know, that's Coinbase's app.
Yep. So Base is the layer 2 blockchain application of Base Chain, which is Coinbase's blockchain. Social networking, the ability to create profiles, earn from that. I mean, there's a lot of different cool things going on in the space. All will attribute value over time. We'll see where that heads. At least personally, um, I'm more heavily allocated into larger uh, coins than I am some of the smaller ones, other than kind of friends and colleagues, obviously, that I've put in money with.
So can I pitch you George Bucks right now, Kevin? It is an incredible coin, George Bucks. It's gonna moon, it's gonna 100x. You can pick it up on some obscure deck somewhere, but trust me, it's 0.000002 cents right now, but it's going to the moon. If you're interested, I'll send you details. Um, and by the way, I'm going to give 10 seconds, then I'm going to move on to a final comment, and we'll end it there. My 10 seconds is I was around for the internet. Kevin, I don't know, we're not going to give away your age, but you're just born, or you're just, or maybe you're just on your way. But I remember when the internet first came out, the internet, it's funny how we say that now. And I saw it. I didn't know what was going to happen, but we're going to be interconnected and all these things. But most people just didn't see it. They're like, this is stupid. This doesn't make sense. I'm not going to do this on the internet. I'm not going to do that. I'm going to do it the old-fashioned way. And look where we've come. Forget about what we saw in the 2000s. You got Netflix, streaming, LinkedIn, all these unbelievable models and things that came about. Uh, and now what's happened lately, even with crypto. But I think that's the exact same thing that's going to happen with crypto. Uh, the world is going to, digital money is going to dominate, because why? If George wants to sell 20% of his real estate portfolio for the first time, some kid in Greece and some girl in Malaysia and some kid in South Africa can actually go on their phone and buy $10 of it, and they can be involved in the markets, and they never were able to before. So I think that's going to be, just that alone, prosperity. I think it's going to be the greatest prosperity tool in history, and taxation out the door. I'm going to end it off with this, guys. Thanks, Dan Kozel, who just wrote in, by far the most informative webinar I've ever been a part of. Thank you so much for that, Dan. And like I said, Dan is like more like Kevin's age, a rising star. Love what he's doing in the space. He understands it, and he's ahead of the curve. And to hear that from the young guys, I think is spectacular. So we're going to end it on that note. There are a couple more questions out there, but we can't get to all of them. We'll send some by email. Tune into the follow-up webcast. Everybody watch your email. Thank you for joining us so much and give us your time. We know a lot of you are on vacation. So if you're watching, listening, thank you for that from wherever you are. Uh, I'm going to say my deep thanks and appreciation to Kevin and his entire team, not just for this presentation, but the work we've done that started a year ago in April of 2024 at Token 2049 in Dubai, when I walked right up to Kevin and Raj. I saw them in their incredible booth, probably the best booth I've ever seen in my life. And I actually asked their tech person to give me the schematics in case I could build one myself at a conference. But more importantly, thanks for being fantastic partners, taking the time to get us here and talk to everybody today so they could see what I see, Kevin. You guys did a fantastic job, and I know there's more to tell. Thank you to your whole team, and thank you for giving us potentially a bridge to take the small cap world into Web3, into the token world, and give everyone a fair shot at growing their companies, because that's all everyone's ever wanted, a fair shot, fair financing. Last words to you, Kevin.
No, I would like to extend my thanks and gratitude to you and the entire team. Obviously, an amazing partnership we have here. Looking forward to everything that we'll do moving forward. Also, a huge thanks to all of the people asking questions, participants, etc. Definitely looking forward to keep diving into all the details. Feel free, reach out to George, reach out to me. Always happy to jump on a call and talk shop in regards to both personal opportunities, but also just where the industry is heading as a whole. Gives us extreme pleasure to be able to share this time with you guys. So thank you all. Thanks, George, specifically, and then thank you to Fabio and the rest of the team on the technicals as well during the presentation. I know you guys have all put in extensive work here, so huge thanks to everyone at AGORACOM.
All right, guys. Thanks for joining us. Look for the next one. Watch your email. We'll send out more information. We're going to send out the on-demand version of this probably early next week, so that you guys can watch this again and you can absorb it. Really appreciate your time. Thank you for participation. See you on the next one. Good night from Greece and wherever you are in this world. See you next time.